Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the bearish but eventually bullish scenario, as we're looking for a bigger three-wave corrective structure, after which we expect continuation to the upside. Here we have a finished irregular flat in a wave W, a finished expanding flat in a wave X, hitting the common target area for a wave X between the 786 and 886 Fibonacci, taken from the start to the end of wave W, and then we're looking for a wave Y to the downside, either in a zigzag, which is most common in a wave Y, a flat structure where the most common flat is an expanding flat with wave B above wave A and wave C below wave A, and then we have a potential triangle in wave Y, which is the least common structure. Most common target for wave Y is the yellow box between the 618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of wave X, giving you a target area between 54.3K and 63.1K. The 1.618 is an extension target for wave Y and is uncommon at 48.9K. Preferably, wave Y is ending after the 0.382, taken from the start to the end of wave W and then put on top of the end of wave X, comparing wave W with wave Y. The 382 is sitting on the 4th of June. The bearish scenario on the lower time frame is an impulse to the downside, 1, 2, 3, 4, 5, and then inside the blue wave 3 we have the lower degree wide count, 1, 2, 3, 4, 5, meaning that in this scenario we are looking for at least 2 more drops towards the downside, 4, 5 in white and 4, 5 in blue. Once the blue wave 5 is finished, we are looking for a bigger retracement towards the upside. The invalidation for this scenario is the 0.618 Fibonacci, taken from the end of 2 to the current low that we have, giving you a level of 69.1K. However, as long as wave 4 is not going to be at least similar in time compared to this wave 2 and price continues to the downside, the 0.618 is going to move to the downside as well with price, meaning if we get these type of ranges which are short but price continues down, then the 0.618 is going to be taken from the end of 2 to the new low that we have until we get a range that is similar in size to this wave 2. A wave 3 can extend quite far, so we have to wait and see when a range is going to form. As long as price is moving towards the downside on volume, the best tip is to wait for a range to form, as a range will give us all the information that we need. The closest support that we have on the chart is the blue box over here between 66.1K and 67.1K, and below this box we have this blue box here, 65.1K to 65.3K. Currently, price is hovering on this very simple support resistance level, the high over here acting as support. The bullish scenario on the 4-hour time frame is an impulse to the upside in a wave 1, 2, 3, 4, 5, where we have a finished wave 1, 2, and a wave 3. Now, commonly, a wave 3 is the strongest, most impulsive wave in an impulse, reaching at least the 1.618, but as you can see, we missed out on hitting the 1.618. The minimum requirement in an impulse wave 3 is that a wave 3 should not be the shortest impulsive wave between a 1, 3, and a 5, and this wave 3 is at least longer than wave 1, but preferably wave 3 is extending to the 1.618, which didn't happen. The common target area for your wave 4 is the 0.236 to the 0.5 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 69.2K and 66K. The invalidation for this scenario is price touching the high here at 65.5K, because we don't want to see overlap between a wave 1 and a wave 4. This wave 4 preferably ends after the 1-to-1, so preferably we continue this range for a little bit longer. Reason is that most commonly wave 4 takes more time to form than a wave 2. This vertical line on the chart is a fib time taken from the start to the end of wave 2 to the end of wave 3, comparing wave 2 with wave 4 in time, and the 1-to-1 is sitting on the 25th of May, 10 AM Central European time, after which we're then looking for price to move towards the the upside eventually in a wave 5. If price continues towards the downside and hits the invalidation, it does increase the probabilities for the bearish scenarios on the higher time frame. The only bullish alternative we then have is a double 1-2, 1-2, 1-2 continuation to the upside. However, your second wave 1 here, which is a lower degree wave 1 compared to this structure, is longer in price and time, which is not preferred. The bullish scenario on the 1 hour time frame is that we have a potential double zigzag WXY, zigzag in W, corrective structure in X, and another ABC zigzag in a wave Y. The common target area for your wave Y is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low of this wave W to the high of this wave X, giving you a target between 67.8K and 67.1K. The 1.618 is an uncommon target for a wave Y. It is an extension target sitting at 66K. For this scenario, you do want price to move towards the upside and hit the 0.618 to invalidate the impulse structure to the upside and increase the probabilities that a corrective structure is finished and price is ready to have a bigger move back towards the upside. The second bullish scenario is a zigzag in a wave A, B, C, where inside wave C we're looking for a 5-wave structure in a wave 1, 2, 3, 4, and one more move to the downside in wave 5. That is also the biggest difference with the impulse to the downside. Here you only expect one more move down in a wave 4 and then a wave 5, after which we expect a bigger retracement to the upside, while in the bearish impulsive scenario we're looking for another 4 and 5 in blue as explained. The common target area for your wave C is between the 1 and the 1.618 trend-based fib extension, taken from the start to the end of A to the end of B, giving you a target area between 67.8K and 66K. The invalidation for this scenario is the 0.618 at 69.1K, taken from the end of 2 to the current low that we have. As long as price is not finding a range similar in size compared to this wave 2, we are going to move the 0.618 to lower prices as price is moving towards the downside. Eventually, we want to see a range in wave 4 similar in size to wave 2, and at that moment in time, the 618 is going to play an important role. Looking at the CVD divergences, the bigger bearish CVD divergences have played out with the move towards the downside, and now we need to wait for a range to form to reanalyze the CVD. If we then look at the probabilities of the different scenarios, then on the 4-hour time frame at the moment the probabilities are quite neutral, as we simply keep an eye on the lower time frame. The probabilities on the 1 hour here more locally are higher to move towards the downside as long as price is not hitting that 0.618, currently at 69.1K, but as price moves to the downside, the 618 is going to move to the downside as well, as we take it from this high to the current low on the chart until we get a bigger range. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.